Today, it's a cut. It's going to be the cut. It's about what's next and what we'll see in that SEP. What are you expecting?
Well, it's just a mark to market. Growth has been better. The unemployment rate has not fallen as much as expected, and inflation is stickier. Most measures of the Fed's preferred inflation is really floating around 3%. That's just not a set of conditions that's going to allow for a proper easing cycle, even if that's what the Fed wants. So the core today is really, where are their personal biases? We don't love that as economists. We want hard numbers, but the devil will be in the details of Powell's presser and how he talks about how the Federal Reserve is thinking about an enormous set of possibilities and extraordinary uncertainty over the course of 2025.
What are the key words that we could hear from Fed Chair Powell that would really express caution as it is talked about and discussed among the FOMC members here? Because that was the theme that our own Jennifer Schonberger teed up and told us to anticipate going into this.
Fed poetry, this is my favorite topic. What are the words the market will be looking for? Careful is a word that we heard a lot whenever we see an inflection point. So last time the Fed used a lot of the word careful, it meant an end to the hiking. We could be hearing words like pause. Pause would mean a breather. So maybe we cut and then we assess. I'm not sure that we'll hear a straight up confession to hold or prolonged holds, but those are words that we're looking for as well. To be honest, what I'm looking for a lot more is not just the indication around the pause, but how are they thinking about tariffs? Tariffs are really complicated for central banks. They increase prices, but they also produce growth shocks, which is ultimately disinflationary or can move up that unemployment rate. How are they considering that? How are they thinking through the uncertainty around data? We just had a large election that's skewing a lot of our confidence data now to the upside. That's making it more difficult to get a clear read. So I want to hear more about their perspectives on some of these issues that'll inform the next year than I'll be too focused on individual words. I got to tell you too, this is a Federal Reserve that 1 month is telling us this is their preferred indicator and the next one tells us another one. So of course markets will react to words like pause and careful, but pay attention to the longer term perspective and their frameworks a little bit more.
It's hard to suss out what they're going to do next when they are so data dependent, but the data is really murky, to your point, Francis. How does that play into your call that we can expect another cut to come in January? Because you lay out a scenario where inflation is still sticky. What is the justification going to be?
Well, it's essentially that this is a Federal Reserve that has told us, they've been very clear, they don't want rates to be as restrictive as they are now. Even though the unemployment rate has not weakened as much as many expected, it is still weakening. And Chair Powell has said we don't need more weakening in the labor market. So this is a Fed that said we want to get closer to their estimate of neutral. Now, this might be the most interesting thing that we can look at today is what is the Fed's estimate of neutral, because that is their anchor for how far they're trying to get. In the past or the last meeting, they said they think it's around 3%. We're an awfully far away from 3%. But do they now indicate it's 325 or 350? That'll tell us that they're actually trying to walk back what they're doing in 2025. So we're listening to them. We're trying to take them a little bit at their word that they want to get closer there. But am I putting big bets on January? No, it's just a reasonable base case. Today will be an important meeting as to how we should think about the January and March meetings.